the crypto king who lost it all overnight. This is the story of Sam Bankman-Fried, a man who, in just 8 years, went from being a nobody to owning an empire worth over Rs 26,000 crores, approximately 3.2 billion. At just 30 years old, Sam had made a name for himself in the world of cryptocurrency. But a single tweet shattered everything overnight, destroying his empire and turning him into one of the world's most notorious financial failures. After appearing on Forbes' rich list and being celebrated on every major platform around the world, Sam's meteoric rise was as fascinating as his sudden collapse. In just a short time, he built unimaginable wealth. But how he lost it all is even more shocking. How did someone build such a massive fortune so quickly? And how did one tweet send him spiraling into financial ruin? Let's break down this story in simple terms. The beginning, a brilliant idea. The journey began in 2014. Sam graduated from MIT and started working at a trading firm called Jane Street Capital. It was there he had a life-changing idea. He discovered a loophole in the crypto market, a way to buy Bitcoin cheaply in the US and sell it at a higher price in Japan. This process, known as arbitrage trading, made him millions in profit, sometimes up to $25 million in a single day. With the money he made, Sam founded his own crypto trading firm, Alameda Research. He brought in college friends and colleagues from Jane Street to help run it. One of those colleagues was Caroline Ellison, who would later become not only the CEO of Alameda, but also Sam's girlfriend. Caroline had little to no experience in crypto, but Sam trusted her and gave her a major role in the company. What did Alameda Research do? In simple words, Alameda was an investment firm. It took money from clients and invested it into crypto, promising them a 15% annual return. Things were going well, except for one major issue. Most of the team lacked real experience in managing such large sums. Despite this, people trusted Sam and his team with billions of dollars. The rise of FTX, a crypto empire, is born. By 2019, Sam was ready to go bigger. He launched his own cryptocurrency exchange, FTX. If you don't know, a crypto exchange is where people buy and sell cryptocurrencies like Bitcoin, Ethereum, and thousands of other tokens. At the time, there were many exchanges, but Sam's reputation and strong investor backing helped FTX grow fast. Soon, over 1 million users were trading on FTX, trusting the platform with their money. Crypto exchanges make money by charging a small fee on each trade. For example, if you buy $10 worth of crypto, a tiny fee like 0.02 goes to the exchange. It sounds small, but with billions of dollars traded every day, it adds up fast. The turning point: greed takes over. This is where greed entered the story. Sam introduced a new cryptocurrency token called FTT and gave users massive trading discounts if they used it instead of dollars. Since FTT had no real value at first, its price was low, but people started buying it just for the discounts. As demand grew, the price of FTT skyrocketed. This benefited no one more than Sam himself, since he held huge amounts of FTT. From nothing, it began selling for as high as $80 per token. FTX and Sam were now everywhere. From partnerships with Mercedes F1 to naming rights of stadiums in the US, FTX was becoming a global brand. Here's what you need to understand. When people deposit their money into an exchange like FTX, it's with the expectation that their funds are safe. They believe they can withdraw their money anytime they want. That's the basic trust that keeps any exchange functioning. But in reality, most users never withdraw their funds all at once, unless there's a major market crash or financial crisis. Taking advantage of this, FTX began using customer funds behind the scenes, secretly investing them into various crypto assets through their sister company, Alameda Research, which was headed by Sam's girlfriend, Caroline Ellison. Even FTX? Employees weren't aware of this because Sam ensured everything was kept highly confidential. His plan was to trade using customer funds, generate profits, and quietly return the money before anyone noticed. But luck doesn't always favor the bold. Around the same time, inflation hit the US economy. People began liquidating their assets, including cryptocurrencies. And when customers began withdrawing their money from FTX, the hidden truth started to unravel. Most of the funds had already been invested and lost across risky ventures. What made matters worse was a shocking leak during a video call with the Wall Street Journal, where Caroline Ellison accidentally revealed that FTX had transferred customer funds to Alameda Research. The moment that phrase, customer funds, was heard, alarm bells went off everywhere. That kind of move is not just unethical, it's outright criminal. Sam tried to do damage control. He tweeted that everything was fine and customers' funds were safe. But by then it was too late. There was one man silently watching all of this unfold, the one who would eventually bring Sam's empire crashing down. Changpeng Zhao, CZ, the founder of Binance, FTX's biggest competitor. When FTX was first launched, CZ had invested $500 million into the company. Later, when FTX became successful, Sam bought back CZ's shares for $2 billion. But instead of cash, he paid him in FTT tokens, FTX's own cryptocurrency. CZ had held on to these tokens quietly, never selling them. What he didn't realize was that Sam had essentially handed him a ticking time bomb. CZ now had so many FTT tokens that he could collapse FTX anytime by selling them all at once, because tokens like these might have a high market value, but they lack real buyers. And CZ waited patiently for the right moment. That moment came in November 2022, when the rumors of FTX's financial misconduct became public. On November 6, 2022, CZ made a single tweet. Due to recent revelations, we have decided to liquidate all our remaining FTT holdings. He hadn't even sold the tokens yet, but the tweet alone sent shockwaves through the crypto world. Panic spread. People holding FTT tokens began selling them in bulk. FTX customers rushed to withdraw their funds. But how could they? Most of the money wasn't even there anymore. FTX was now bleeding. Seeing the chaos, CZ stepped in again and offered to buy FTX, a move that seemed like a lifeline. But after reviewing the financials, Binance backed out just 2 days later. It turned out FTX owed users $10 billion but only had $900 million in liquid assets. That meant over 90% of customer funds were gone, lost in risky investments. And just like that, the empire collapsed. The man who was worth $26 billion just a few days ago was now staring at an $8 billion hole. On November 11, 2022, Sam finally tweeted, "I'm sorry, FTX is bankrupt." The moral of the story: never build empires with someone else's money, especially without their knowledge. Trust, once broken, can destroy even the most powerful.